Hi everyone. So today we are going to talk about a very important topic which a lot of you ignore is financial planning at the start of the year. So a lot of people think that financial planning should be happening at the end of the year, that is March. When we are talking about year, we are talking about a financial year. So please just keep that in mind. What we suggest is it should be happen in the month of April, May for the next academic year, financial year. Recently, Arun Jaitley in his interim budget passed on a lot of new. So, for example, if your salary falls below 5 lakhs, then the rebate is 12,500. And if you are a salaried employee, then the standard deduction uh, is around 50,000 now. No tax planning is required for these particular assets, as you can just put this in the calculation and you can take the standard deduction. But we still would insist that you should take the financial planning at the start of year rather than the end. So in this particular article, we are going to talk about why it's important, secondly, and how you should proceed with that, and few tips and tricks which we would be suggesting in this particular article. So please stick with us. It's not going to be long, but it's going to help you quite a lot in that particular segment. So first of all is section 80C and 80CCD 1B. 80C is our most known section in which 1.5 lakh is deductible from your income for the refund, and a lot of things comes under this particular bit, like unit linked insurance plan, equity linked savings scheme, Sukanya Samriddhi scheme, 5-year tax saving fixed deposit scheme, PPF, EPF, all these comes under this. And also few years back government introduced 50,000 additional for the NPS, National Pension Scheme, under section 80CCD 1B. So that's very important. And once you are aware, like where you want to invest, either PPF, PPF, and please understand all these instruments have a uh, different need of different people. So don't just listen to your friends. If he's investing in PPF, so you also go ahead and invest in PPF, because ELSs can give you better returns, but they are a bit risky also. And some people like PPF, but PPF also has a strong duration where the money gets logged in that particular product. So you actually needs to start seeing what is the right and uh, product which is required by you and you for satisfy your needs. Great. So ATC needs to be catered according to the person, and also we need to understand from where ATC is coming from. So let's say you are an employee, and now you also have a loan and you have children as well. And say you are investing somewhere around 60,000 in a house loan, and you also have to pay the student's fees for 15,000, so that adds up to 75,000. So now you don't need to put 75k in any instrument, that's already taken care by these two expenses. Now, because you're a salaried employee, your EPF would also be getting deducted. And let's say 20,000 adds up on all these EPF for the whole financial year. So that totals up to 95,000. So now you don't need to think of 1.5 lakhs to be invested, but you have to think of just 55,000 over the complete financial year. So this computation is very important, because at the end of the year you would not get the time to understand this, and you might end up doing 1.5 or over what the government requires you to save. There are some other bits as well. So recently, people have started putting section 80D, that is health insurance. So there is a division of parents and you and your spouse. So you can actually put 25,000 for you and your spouse in whichever is being paid for the health insurance in section 80D for taking the deductions. Also, if you are paying for your parents as well till 25,000, that is also deductible. Now, there's some things which we wanted to talk about salaried employees itself. So please, you have to be proactive in asking your employer, because there are four components which becomes non-taxable according to each of the companies. So first is HRA. So most of the companies give this particular component. So see how much of your salary comes under HRA, and that can be non-taxable. Then is leave travel allowance, which is also some of the companies exempt, and cost. And this is a cost incurred on travel for self and your family. Another is telephone reimbursements. So if you are in the business where a lot of sales calls has to be made, so some companies gives this particular bit, and the car prerequisite. So relief is available for running and maintenance expenses subjected to conditions prescribed. So now we have talked about section 80C, 80D and section 80CCD 1B, which is for NPS. So now what you need to think is three things when you are thinking of how you should make a plan for yourself. First is return expectations. Are you expecting a better returns, or are you just looking for better safety? So for example, traditional insurance plans, PPF, national saving plans, tax saving FDs don't give you better returns, but they are very safe. In comparison, ELSS has a potential to give you very high returns, but they are not that safe because your returns are adjusted with the stocks. Income taxability. So still PPF is completely exempt from the taxes. EPF is completely exempt from taxes. NPS is partially exempt because 60% while you would be withdrawing is non-taxable, but 40% is taxable. FDs are completely taxable, the money which gets out of it. So please look at what is the income taxability on the product where you are putting your money for tax saving. And liquidity, because there is lock-in period of 15 years in PPF, so a lot of people don't put that over there. So that's another bit which you need to think about. What's your lock-in period? Do you require it for some short bit, or you can put money in PPF and forget? Right. So few tricks which we want to suggest to you is, one is invest in voluntary PF. So if your organization gives you an option, look at the tax bracket, how much money you can invest, and please invest in the voluntary provident fund. So while everything remains same in VPF, but we believe it's a best component to give you the best returns in a debt instrument. And while let's say a bank gives you a 9% interest rate in the new banks, but if you look at the after tax filing and everything, it reduces to 6%. And also the best part about voluntary provident fund is it's get deducted before you get your salary check. So you have a better discipline over it when you are doing it. One another caveat which we have right now is set up an emergency fund. So everyone requires an emergency fund. So please make sure that you have got 4-5 months of saving before you create an investment plan as well. Because we don't want that you invest right now complete money in the tax instruments, but later on you realize that you need to break it because you have not done the homework of creating an emergency fund. And last but not the least, don't invest too much now. So because we know it was an interim budget, and the new finance minister would be releasing the final budget in the month of July. So there might be few changes. Overall, it might remain same because the last finance minister was also from the same government. Though still a good habit would be stick to putting some 70% of your money, and let's wait what the new ministers suggest in the new budget. Thank you. I hope you like this video. Please do like and share. That's not gonna provide us any monetary benefit, but it definitely encourages us to make more videos for you all. Thank you.